I get to share with you one piece of paper that can actually put $11,814.80 right back into your bank account. Before I get into that though, I want to tell you a little bit about who I am. My name is Edward Collins and I'm the founder and builder of multiple businesses. I'm a serial entrepreneur. And currently we're in one of my businesses, Up-Level Entrepreneur, which is an ecosystem in which I actually serve business owners just like you, teaching you all the secrets, the tips and tricks and strategies that I've learned over the past few decades, helping you to create, accumulate, and protect real wealth. Now that's enough about me. I want to jump right into something that I think can help you. Would it surprise you to learn that the vast majority of businesses in the United States are structured in a way that they really don't have any formal structure at all? Most businesses here are set up as sole proprietorships. And what that means is that you are operating your business day in and day out without any formal business structure around it. So any of the income and expenses that are associated with that business, all of that activity flows through to your personal tax return, something referred to as Schedule C of that personal tax return. One of the main problems of that is that vast majority of the income that's being generated by that business is going to be subject to a whole nother set of income tax referred to as self-employment tax. More on that in a minute. Before we get into that though, the other main problem with having your business operate this way is that without formal structure, all of your personal assets may potentially be subject to the liability associated with that business. That's easily resolved. If you are operating a business here in the United States and you're operating in such a way that you're actually generating some money, at a minimum, you should be structured as a limited liability company. And what an LLC does is it forms a bubble, a layer of protection around your business so that if there is some sort of harm that is received by a third party inside of your business and based on your business operations, that third party can't reach past your business to get to your personal assets. Don't get me wrong, there's a lot of things you need to do and operate in a certain way in order to make sure that your limited liability protections stay intact. But essentially what this formation, this bubble around your business does is it protects your personal life from your business life. So if you structure your business as an LLC, that does nothing to tell the IRS how you wish to be taxed. If you don't actually tell the IRS how you wish to be taxed, they're going to look right through that business as if it's not even there. Essentially, they call that a disregarded entity. They look right through it and assume that all of the income is being generated by you as a self-employed individual. They actually call that income self-employment income. And the problem with self-employment income is the entirety of that amount is subject to self-employment tax. That's a whole nother tax over and above ordinary income tax. And right now that's 15.3% combined. I say combined because self-employment tax is really comprised of two different layers of taxation. The first is Social Security tax, which is taxed at 12.4%. And the second layer is Medicare tax, which is taxed at 2.9%. Now, Social Security tax does cap out. You're only taxed at the Social Security portion of that for the first $160,200 of income starting in 2023 going forward. So anything over and above that, you're only going to be paying the Medicare portion of that 2.9%. Now, I think the easiest way for me to explain though is to give you an example. Here at Up-Level Entrepreneur, we tend to serve business owners who are already actively engaged in business. They're doing well, they're generating income. So let's assume for a moment, for the case of this scenario, that you're earning $250,000 before income taxes. When you're looking at that structure, the first $160,200 is going to be subject to the entirety of the 15.3% tax. Then the next $89,800, getting you up to that $250,000 of income, that's going to be taxed at the additional 2.9%. Now, when you look at this together, that's going to mean that if you earn $250,000 before income taxes, you're going to be paying an additional $27,114.80 of self-employment tax. Now, come on, if that doesn't hurt you, I'm not sure what does. But I want to teach you how to do it differently. I want to teach you a method that can actually put massive savings back into your pocket each and every year. I did mention one piece of paper that can change your life. That's Form 2553. It's a form that you can fill out and file with the IRS to elect to be taxed in a different way than a sole proprietor. You can actually elect to be taxed as an S corporation. And you may be saying to yourself, wait a minute, why would I ever want to be taxed as an S corporation? S corporations come with a variety of different tax benefits for you. But one of the key benefits is you as the business owner get to choose and select a reasonable salary to pay yourself. And that reasonable salary becomes the only portion of the income that that business generates, which is subject to self-employment tax. All of the other money that's within that business that you potentially would take out would be taken out as a dividend, which is not subject to self-employment tax. This is massive. Let's use the example. Let's assume that you're earning $250,000. You elect to pay yourself 40% of that income as a reasonable salary, so $100,000. If we use the same understanding of how self-employment tax works, that means the entirety of your salary, the $100,000, is going to be subject to self-employment tax. And again, because it's lower than the $160,200 we talked about earlier, the entirety of that is going to be all taxed at 15.3%. But that's it. All of the other money that's being generated by the business, that's not going to be subject to tax at all. That gives you an ability to then only have $15,300 of self-employment tax. Now guys, if you remember, in the scenario A, you owed $27,114.80 of self-employment tax. Scenario B, by filling out one piece of paper, you only owe $15,300. That's a savings in your pocket of $11,814.80. Now what could you do with $11,814.80? You could go on a massive vacation. You could take a course. You can invest up to 2 years into our Real Profit Society at the gold level, the gold tier. You could do so much with $11,814.80, but not just this year, every year thereafter. One piece of paper can change your life. Now, if you found this information to be valuable to you, please hit that thumbs up button because it does wonders for me and it would really help out the algorithm. And if you don't want to miss out on content like this, content that can actually change your life, change your business, be sure to hit subscribe because you're not going to want to miss what's coming on this next episode. Can't wait to see you there. Bye for now.